So I'm going to start out with, I know everybody wants to know what they can and cannot write off on taxes. So any guidance in that way? Or should they form an LLC or anything like that to protect them?
Yeah, that's a great question. So I guess first and foremost, if you're just fishing as a hobby, that's going to be a lot different than if you're fishing as a profession, or at least you're trying to make it a profession. So forming an LLC, that can be a little bit of a misconception because you actually don't necessarily need to form an LLC to be able to write off your expenses if fishing is a business for you. The LLC is really there to give you, liability protection. It's more there for the legal side of things. But as far as taxes go, you can operate as a sole proprietor without even creating an LLC, and you can still deduct any of your business, your fishing expenses that are business related.
Yeah, so we have clients all over the U.S., some in Canada. As far as taxes go, we can work anywhere in the world.
Okay.
If we're doing audits, like a financial audit, then we have to be licensed in every state.
I know we had Alvin from the American Angler Outdoors Network say good evening. Alvin's a good friend of ours. He broadcasts our podcast on the American Angler Outdoor Network. Great friend of ours. So
Yes.
good evening now.
Nice.
But me and John's kind of the same way. We're kind of weekend warriors. So I know we're kind of limited. We don't buy a whole lot of stuff. We don't have, a boat and, keep up with mileage and all that stuff. We just fish kind of local, but being a kind of a weekend hobby, I guess you'd say. What's your suggestions of anything on that, or is it kind of limited to a certain amount?
Yeah, great question. So kind of diving back to your LLC question, I did want to mention that sometimes creating the LLC ultimately can be a good idea later down the road for taxes. And I'll dive into that after this question. But for you, if you're just kind of a weekend warrior, but it's more than just a hobby, and maybe you've got sponsors or you've got some income flowing in from this, then yes, you want to really keep track of anything fishing related, and that can be a deduction. So obviously your tackle, rods and reels, mileage is a big one. So if you're driving to and from tournaments, different lakes to fish, keeping track of those miles. When it comes to those auto deductions, we can either take the standard mileage deduction, which for 2024 is going to be 67 cents per business mile. So if you drove, 30,000 miles in the year, but only 10,000 of those were business related, well, we would take the 10,000 multiplied by 67 cents a mile. And that's a pretty nice deduction right there. That's $6,700 right off of your income from the fishing, business, or sole proprietorship.
Right.
But yes, anything like that, even meals, if you were to meet up with maybe another, fisher and talk business in some way, whether it be the podcast, whether it be meeting up with some of your sponsors and you go out to a meal, then you can deduct that meal, and you get half of that. So you get a 50% meals deduction for any business related meals.
Nice.
And then some other things that people often don't think about, you can actually deduct things like your internet bill, your cell phone. Now these things would need to be at their business percentage. So if you can't justify that it's 100% business use, that's okay. You could still allocate 10%, 50%, a certain amount and deduct that. And then another big one that people may not know about is the home office deduction. So, I'm assuming that if this is a weekend warrior type of side gig, then you're going to be probably doing a lot of your work from home and from a home office space. So so basically what needs to happen for that deduction is you need to measure the square footage of that area where your home office is, and it needs to be used for the business exclusively. But let's say it's a 10 by 10 room, that's 100 square feet. And then you divide that by the full square footage of your home. So maybe your home is 2,000. So right there, you're getting a 5% multiplied by, your mortgage interest, property taxes, homeowners insurance, utility bill. We can even take a small percentage of depreciation on your home. So the value of your home over time times that ratio. So that's a really good one that a lot of times people don't even think about.
Well, I would add, a lot of people think that I didn't make money at this business, so I don't need to file a tax return. I don't need to report it. But if you have, a side gig of fishing and you make any money from that at all and you're in it to make a profit, you can write that loss off against your regular income. So a lot of times that's worth keeping up with, even if you're not profitable. Now you do need to have the intent to make a profit maybe in the future, but if you're losing money on a side hustle, that's a great deduction as well.
Yeah, that's a great point, because some people might think, hey, I'm losing money. I wouldn't need to pay tax on this anyway. It's too much to keep up with. But if you really take the extra time to keep up with your miles and the costs of your tackle and rod and reels, that stuff adds up. And so if you can show a loss on your tax return, yeah, that can potentially help you get a refund if you have a W-2 coming from your main job. And then at that point, that refund can be reinvested into your fishing side gig, And so definitely worth keeping up with.
Okay.
Oh, cool deal.
Guy Cromp says hello and have a great evening.
Hey, guy.
He's a guy by me.
Awesome.
Kevin McGibney, he's a owner of K&K Customs Electronics and aftermarket boat equipment. Great podcast topic. Thank you, Kevin.
Thank you.
Another question I had was, most fishermen don't become pros right away.
Right.
Okay. So if I've been fishing for, say, 5 or 6 years and I have fishing rods that I purchased years ago, can I sell them to my business to claim them off my business?
You wouldn't sell them to your business, but you can enter them into your business. So let's say you've fished for 5 years, you've got a garage full of tackle, equipment, boats, all of it. And then you say, okay, January 2025, I'm starting a new fishing business. I have an intent to make a profit. All of that equipment is contributed to the business at the lower of fair market value or cost. So probably fair market value.
That's
sorry, probably cost.
Yep, I got you.
Yeah. Or we can go on eBay and find the highest priced item and say, yep, that's that one.
Yeah.
So it's helpful to have something like what you said, an eBay, and when you're making that list of everything you're putting into a business for support, have listings like that.
Yeah, that's such a great question though, because so many people, we see this a lot. They'll say, you know what, I've been doing this as a hobby for a while, but I'm to the point where I think I can start making a little bit of money doing this and make this a business. And they don't realize that all those past expenses they had can be, contributed to their business as a deduction. So definitely worth going through and coming up with that list if it's your first year.
Okay. What about entry fees?
If you're fishing for a profit with the intent to make a profit, yes, all your tournament entry fees would be deductible.
Well, that's the intent of every tournament, but the outcome is not the same.
Yeah.
Yep.
So yes, you could write those off.
What's the best way to keep track of all this?
We like to use QBO, QuickBooks Online.
Okay.
So we have professional fishermen that are clients of ours, and they're all over the country all year long. And what we do with them is we connect them to QuickBooks Online. We say, can you limit to 1 or 2 credit cards, 1 business checking account? We'll connect those to the software and it'll pull through all of their expenses. And if you can keep your personal expenses out, Christmas shopping or spas or alcohol, anything like that, if you can keep those off those business credit cards and business checking account, everything that comes through on that business credit card and business checking account, if those are business expenses, we've already got them.
Nice.
So when we get ready to do your tax return, we have everything we need.
Yeah.
So,
and even if you're not an LLC or any type of entity and you're just starting as a sole proprietor, you may not have a business account. So then what we might tell you, or at least advise you to think about doing, is just see if you can open another checking account, and exclusively use that for this sole proprietorship. And that just makes it a lot easier for you to keep track of all your business, income and expenses. And then once you get to tax time, you can look through that statement, that bank statement or credit card statement, and make sure, you haven't missed anything. Because if you don't have an accounting software like QuickBooks, then, people will potentially use an Excel spreadsheet or even just total things up and tally it on a piece of paper. But you want to make sure that you have a good paper trail and you're saving receipts. Not so much for the accountant, but just in case the IRS ever decided to audit you, you have proof, of your expenses.
Al with the American Angler Outdoors says, can you use a credit card statement as a receipt?
No.
Yeah.
It would be a receipt of payment, but it's not a receipt of what you purchased.
Okay.
Yeah. So like I said, the IRS, they're going to want to see the actual receipt, unfortunately.
Okay. So that can be difficult at times because, traveling all over,
Yes.
a lot of gas stations don't issue receipts.
Okay. Well, that is the exception, is gas.
Okay.
We don't need gas receipts, or you don't need to save your gas receipts.
Okay. And that's because the mileage factor?
Well, even if you're taking actual expenses, they just don't force you to keep up with gas receipts.
Oh, okay.
Probably because it's so much.
Yes.
Guy Comp says, keep records of rod prices, reels, tackle, turtle tackle, hotels, boat maintenance, and fuel.
Yes.
Yeah.
Great advice.
That's great advice. And real quick, just to circle back to fuel, if you're talking about your automobile, we have one of two options. We talked about earlier the standard mileage deduction. We can also take what's called, the actual method, and that's where we would take the cost of the vehicle, the cost of the fuel, the cost of oil changes, repairs, and we would take that at the business percentage. So if it's a 100% business vehicle, then we're going to take 100% of the fuel, 100% of the cost of that vehicle, and depreciate it. Maybe it's only 50%. So that's why it's important to keep track of mileage and the actual expenses if possible. And that way you can kind of figure out what's going to be the better deduction for you.
Okay.
And along that same topic, you want to track your boat fuel separate from your automobile fuel, because we can take 100% of that boat fuel, and then maybe we're taking the standard mileage deduction on the automobile. So if you keep them separately, we can take both.
Mm-hmm.
Okay. So what you're saying is do two transactions for gas, one for the vehicle and one for the boat.
That would be helpful.
If the vehicle's not 100% business oriented.
Yes.
Even if it is, because depending on what type of vehicle you drive, we're probably going to take, as much as you guys travel, we'll probably take the standard mileage deduction.
Okay.
And the exception to that is if you've got a big, brand new, beautiful truck and you need to write it off 100% to offset some income somewhere else, then we may 179 it or bonus depreciate it that year.
Kevin McGidney has a couple questions. Where are you located and are you taking new clients?
Well, of course. We're always taking new clients, and we're located in Decatur, Texas. We serve clients all over the U.S. and some in Canada.
Yeah, and if you're from another state, we can set up a virtual meeting, but we're kind of outside of the DFW Metroplex. But yeah, we'd be happy to set up a consultation. And they have our website below, and at the end, we can give you our emails and other ways to contact us as well.
Now, I've had a couple times where I've changed rod sponsors, or I have a bunch of tackle and rods I'll donate to a local high school, like high school bass team. Do I just need a receipt from them, or how do you recommend do like a charity donation for that?
If you've already written the rods off, then you're not going to get to double dip for donating them. You've already expensed them. But if they're your personal rods and you do a donation, yes, get a receipt for that.
Okay.
And a pro fisherman would never have personal rods.
No.
Yeah, make sure to write all those off if you haven't, and you're a pro fisherman using them for business.
Oh yeah, I got spring clean every once in a while. The wife would kill me, so I got to do that.
Yeah, and Rob says we don't spend that much money on fishing.
Right.
Nobody does.
No,
It's almost free.
I don't know if I made a mistake or not, but I gave the wife my password and login information for my bank account. So I don't know if I'll be in trouble next year.
It could be.
Uh-oh. Just keep your seats. Keep your seats.
Yes. Evan Perry says great information. Thanks, Evan. Evan runs a tournament series up New York, Pennsylvania area. Boat fuel is must have receipt.
Yes. Yes on the boat fuel.
American Angler Outdoor says, I use the actual cost. What's the reason? That was the reason for my question. I lose most of my gas receipts.
Everybody does.
Yeah.
So nobody saves gas receipts. One thing you can do, especially if you're traveling, if you use the QuickBooks Online, you can take a picture with your phone. You know, if you go buy supplies, lay it on a table, take a picture, send it to this QBO email, and it'll connect to that transaction in QuickBooks. So you'll always have your receipts.
Now, isn't there a spot in QuickBooks that will, if I believe it's linked up to your phone and it will keep track of mileage for you? You just have to designate it?
Yeah, it's pretty intense. I don't use it, but we do have clients that use that. So one thing, you know, we have a lot of clients that struggle to keep up with mileage on their vehicle. So your motor vehicle department will have your beginning and ending miles. You know, they'll have a record of that. So you want to make sure January 1st, write down your beginning miles. December 31st, write down your ending miles. If you drove 20,000 miles during the year and 90% of them is deductible, at least you have something. So, and the IRS will allow you, if you drive, which you guys don't, but if you drive the same route per month, every month, you're basically driving the same business route, then you can track it just for 1 month. Or if you do the same route every single week, you can track it for 1 week and then extrapolate that to the year. So sometimes that's easier.
Okay.
All right. Another question about donating. Do I take the actual cost or the retail value on his taxes?
Typically we do about it's called the thrift value, which is that 33%, about a third.
Typically.
Now, is that retail?
Well, it's used retail. It's called thrift value.
Okay. So that 33% is off from actual
cost.
retail.
Mm-hmm. So if you had $1,000 rod and you donated it, maybe it was $350.
Okay.
So anything is it over 500, Nick, that needs an appraised?
Yeah. So, you know, if you're just donating one time in the year and it's less than $500, it's not really an issue to just, not have a receipt. You know, you can claim up to that 500 non-cash donation, but as soon as you're getting to be above the 500, the IRS requires you to actually provide more information. So they're going to want to know, what was that thrift value? What exactly did you donate? And that'll be on one of the tax forms for non-cash donations. So that's why it's important to obviously get those receipts when you donate to a place like Goodwill or something. They should be able to provide you with some of that info.
Yeah. I know our local community programs, they do that, collecting clothing and stuff like that. You can bring it in, put your name and email on it, and they'll email you a receipt. So, which is nice.
Yeah, very nice.
All right. Jeremy May says he keeps getting packages from Tackle Warehouse.
For some reason.
That means he's buying.
Subscribed to
He's making last end of year business purchases. So that'll be a nice deduction.
This goes into the sponsorships and stuff like that. Should you issue 1099s, or do you issue 1099s to sponsors?
We don't issue 1099s for sponsors. We do for vendors.
Okay. All right. Jeff Fitz wants to know, you should be able to get a per diem deduction for every day over 80 miles from home.
There's not an actual miles from home. Nick, what is the?
So they have a per diem deduction for like full days away from home. You know, so if you're traveling for business and you're away from home for more than a full day, you can get that per diem deduction for meals and lodging. It's pretty good, actually. So you'd multiply, you know, if you're traveling fisherman and you're gone, 200 days of the year or something like that, if you're gone for those full days and you're traveling away from your main home, you can multiply that times the per diem rate. And that can be your deductible, like meals and travel per diem deduction. And oftentimes that's going to be a lot better than taking your actual meal expense as a deduction.
And Nick,
Gotcha.
on the meals, if they're self-employed, no per diem, correct? Or is that travel?
I think that, I'm sorry, I
lodging.
think that's just the travel lodging. The meal should be available for anyone that's
Okay.
self-employed.
I got you.
Okay, so no 1099.
Well,
Yeah, so the
1099s for any vendors that you pay. If you have a photographer or you pay a marketing person, you would 1099 them. Attorneys,
Okay.
CPAs.
Mhm. Yeah, the
I missed that
1099
question, Rob.
There you go.
QuickBooks is our friend. Yes.
Yeah, QuickBooks is great. We always tell people, like, even though maybe you have to pay $50 a month or $70 a month, however much, your subscription to QuickBooks is, in the long term, a lot of times it's going to save you money because you're kind of guaranteeing when you connect those business accounts that you're not going to accidentally miss an expense on the tax return. So that way you're making sure to pick up every expense, get every deduction that you can. Because obviously if you've got the expense, you don't want to get to tax time and forget to deduct it.
What about depreciation? Boat, trucks, trailers, things like that. How does that work?
Yeah, so that's a great question. It kind of depends on, with the vehicles like trucks, it's going to depend whether you decide to do that actual method or the standard mileage. Usually kind of a general rule of thumb would be if you have a more expensive vehicle, like a truck, for example, and maybe you don't drive quite as many miles throughout the year, a lot of times the actual method is going to be better, because you're going to get to depreciate that vehicle. So if you paid $70,000 for a truck, if the gross weight of the truck is over 6,000 pounds, you can actually write all of it off in the first year that it's placed into service, even if you are financing it. Even if you only put, $100 down and you're financing it, you could write it all off in 2024. If you bought it on December 30th, so that can be a great deduction if it's 100% business use. But if you have maybe a less expensive vehicle, maybe an older vehicle, and you drive a lot of miles, then oftentimes that standard mileage deduction is going to be a lot, better for you. So we can obviously look at it each way, but that's kind of how depreciating a truck would work. You'd either do actual method or you do standard mileage. With a boat, it's kind of a similar deduction where we can take that depreciation over 5 years, or we can do the Section 179 where we accelerate some of that depreciation up front. So, a lot of times with clients who are self-employed and maybe they have a lot of income and they're in December, they're at this time of the year and they're like, man, I've made a lot of money this year. I don't have a whole lot of deductions, but I know that I need a new boat for next season, or I need a trailer for next, for the tournament season coming up next year. Well, maybe it makes more sense to buy that now before we get into 2025, because you can accelerate that write-off and you can take that in 2024, and you can take that on your 2024 tax return.
American Angler Outdoors says, is there a minimum for sending a 1099 out where you do it for any expenses or just over a certain amount?
Yeah, so for 1099s, if you pay someone over $600, then that's when you're going to need to issue the 1099. So if you paid, like Mitzi was saying, if you paid a CPA, or if you paid, even if you actually paid rent, you would issue a 1099 for the rent payments. If you paid any type of vendor over that $600, photographer, filmer, then you're going to want to send them a 1099.
Okay.
Okay.
And I put their email addresses up on the screen for you.
Oh, awesome.
So,
and I'll also say this about the 1099s. If they're an S Corp, you don't have to send the 1099 unless they're an attorney.
Yeah, and actually, Mitzi, with the S Corp, I was going to ask, have you guys ever heard of S Corp? Because I wanted to kind of explain how creating that LLC actually eventually can possibly help you with taxes. It's a little bit of a more complex topic, but for those people who are in this for a business and maybe the business is starting to grow, this can be a great tax strategy if the audience would be interested.
Sure.
Awesome. So earlier I was saying that, creating an LLC doesn't really do you anything in terms of taxes. It's not really going to help you at the immediate moment. It's more so going to help you with that liability protection, things like that on the legal side. However, what you can do is once you've formed an LLC, later down the road, you can elect to have it taxed as an S Corp. And so initially, when you set up a single member LLC, the IRS views that as a state entity, so they call it a disregarded entity, which basically means you're the same thing as a sole proprietor. So if you just started working for yourself and it was a side gig, you file your 1040 tax return with a Schedule C on it, and that's where you record all of your income and all those expenses. Once you set up the LLC, it actually works the same way. You keep filing that Schedule C, but at a certain point in time. And we usually would recommend that once your net income, so, once you've come up with all your expenses, once that net is more than 50,000, usually you're going to save taxes by electing to be taxed as an S Corp. And the reason for that is because on that Schedule C, you guys may be familiar with this, but when you file the Schedule C on your taxes, they tax you in your normal federal income tax brackets, but then they tack on there something called self-employment tax. And that's the Social Security and Medicare. So you're paying at the highest point 15.3% just on that FICA, on that self-employment tax on your net income. And whenever you elect to be taxed as an S Corp, you actually get to split your business's income into two different buckets. Some of it is still self-employed income, but then some of it gets to avoid that 15.3% self-employment tax. So that's a really great strategy once your business really takes off, and maybe once it's no longer a side gig, once this is your main gig and you're netting more than 50,000, then usually what we would advise is making sure you have your LLC, and then we file a form with the IRS so that we can have them tax it as an S Corp.
Awesome.
Good point. Good point.
So for some people, Alvin with the American Angler Outdoors says, thank you. Gross and net, can you define them or give a good example of a difference?
Yeah, so gross is going to be what the 1099s say. Like, for example, if somebody sends you 1099s because they're sponsoring you, or you won at a tournament, you're going to get these 1099s in the mail most likely.
Yep.
That's typically going to be your gross. And a lot of times your gross is more than the sum of all your 1099s because you've gotten money from a lot of different avenues potentially. So the gross is that basically that dollar value of all the money that came in before any of your expenses. And then on your taxes, you're going to make sure we're going to itemize all your expenses: meals, travel, fuel, depreciation, home office, internet, cell phone, supplies, rods and reels. We're going to itemize all those as deductions, and you're going to get down to a net number. And that net income ultimately is what you're taxed on. So that's why coming up with your, maximizing your deductions, making sure you're not missing anything, that is going to be super important to avoid paying unnecessary tax that, you shouldn't be, paying. So. And
for fishermen, I was told that it's gross what falls through the net. So
That's funny. Yeah.
Gross is above and the net's below.
I like that.
So that's the way it was explained to me, because for some reason I had a hard time deciphering the two of them.
Yeah, but I know like usually if I make below like 600, is that like the limit? Like if you win under 600, they don't usually send you something. It seems like over 600, they'll send me a like 1099 or whatever, like January.
Mm-hmm. Exactly. And Mitzi, one thing I know we wanted to mention, and maybe you can describe it a little better, but getting 1099s, sometimes if you're all over the US, you're getting 1099s from different states. And so it can potentially add a requirement to file these state tax returns. And maybe a lot of people don't realize that.
So each state will have its own requirements. Some states don't even have, like Texas doesn't have an income tax. New York, of course, has a big whopping income tax. So,
yeah, tell me about it.
But they will typically have a minimum amount of money that you have to make before you have to file. So if you're making $500 or $1,000 in a state, you're probably not going to have a filing requirement. But as your income grows state to state, you will have multiple state tax returns.
And a lot of people think, hey, well, I live in Texas full time, so that means I don't file any state income tax. Well, not necessarily, because if you're doing a tournament in California and you win $30,000 in California, then California wants you to file that state tax return and pay them some tax on that $30,000 you won there, because that's where you earned it. So that's something that people don't always realize.
So what you're saying is only fish in Texas.
Yes.
Exactly.
Where else would you want to fish?
True.
All
true.
over. Kevin McGinley says, we'll be contacting you to possibly see if you would like to take our business on as a new client.
Thanks,
Great.
Kevin. Thanks, Kevin. Yeah, that sounds great.
And Nick, did you want to talk about children on payroll? A lot of the fishermen will have their kids clean the boat, pack the boat.
Mm-hmm. Yeah. So, okay, this is a great one. If you have children under the age of 18, you can pay them through your business. Now, it's a little trickier if you're an S Corp. So if you're just an LLC or a sole proprietor, this works best. But basically, if they're under the age of 18, you can pay them up to the standard deduction that everybody gets when they file their tax return, which for 2024 is $14,600. So if you have a child, 14, 15 years old, you're trying to kind of teach them some responsibility. What we say is, hey, don't make money, pay tax on it, and then give the kids money. Instead, let them work for your business in some way, earn this money, gain that perspective. But then you're also getting a write-off because you can pay them up to that $14,600 standard deduction. You don't have to file a W-2 for them. You don't have to withhold a dime of any taxes, no Social Security, no Medicare, no federal, because they're under the standard deduction and they're under the age of 18. And then you get to write that off against your business. So that's a great deduction that people don't often know about. And we even have clients with young children, 3, 4, 5 years old. And you'd be surprised, you can find things that you can pay them for, like modeling, pictures for the website, helping you clean the boat, like Mitzi said, organization, maybe if you have like a storage space. There's just a lot, that unlocks a lot of opportunities, for great deductions, and you're getting that value teaching your kids work ethic at a young age. So it's really great all the way around.
And there are requirements. So there are some requirements you would have to actually pay them, and it would have to go into their checking account, but you could have control over that checking account.
Okay.
Yeah.
They
and it
can
needs
pay
to be
their own
reasonable.
expenses.
It needs to be reasonable. You wouldn't want to pay them $300 an hour to clean the boat. It needs to be actual what you would pay someone else. So.
Okay.
Mm-hmm.
Excellent.
Great tip. I got a 15-year-old, so great tip. Thank you,
nice.
guys.
There you go. Yeah.
Put them to work.
For you people that have a 6-month-old, I don't know if that'll work.
No.
Modeling. Yeah, that's about all you can do at that age.
Yeah.
Since you mentioned modeling, we'll get another question from the audience. We're based in Virginia, but we also have a Tennessee and North Carolina sales tax license.
We can file, we can file those state sales. Maybe they're selling products in other states or selling online, and they have Nexus is what they call it when you reach certain thresholds to where you need to file those sales tax returns. So that is something we see, and we can definitely help file those returns and report that info if that's something you're interested in.
Now, if you pay tax on a product, like I go out and buy a fishing rod at Walmart or wherever, can you write that tax off as part of the expense?
Yes.
Okay.
Mm-hmm. The full purchase price can be written off. Mm-hmm.
Okay. Now, so a lot of fishermen now are branding themselves. Okay, making themselves a business. When they start selling merchandise, whether it be hats and shirts or coolers or whatever, do they need to collect sales tax on that stuff?
Possibly.
Okay.
Yeah, possibly. Mitzi, do you want to dive into that?
Yes. So it depends. Every state is different. Every state has their own sales tax requirements, but most states, and I think maybe all states, do require you to collect at least some sales tax. but they all have thresholds. So if if you only earn $100 or even $500 in a state, you probably don't have a sales tax requirement. What a lot of people don't realize is if you're going to sell or do business of any kind in a state, you need to register with that state, and that will trigger the sales tax responsibility. And so you'll register your business in that state, and then you will register for sales tax, and we can help with all of that.
Yeah, we see too, a lot of times people say, oh, I created an LLC in Delaware because because they have the best laws. But really, that doesn't really do you any good. It depends, where are you actually doing business? Are you doing business in Texas, in Oklahoma? Where are you at? Because ultimately, if you're doing business in a different state, then you need to register there technically.
I know we got a quick question from Kevin. He says, physical nexus versus economic nexus.
Yeah, Nexus, that's kind of what we've been speaking about with the sales tax, for example. For example, like a physical nexus is if you're physically in the state. I have a store, I'm selling rods and reels here in Texas, so I have a physical presence here at this store. So obviously you're going to collect sales tax based on that location. Here in Texas, it'd be 8.25% in most cities. Now, what we see though is maybe you're an online retailer and you're sending products all over the US. Well, that is when you kind of need to dig into the economic nexus and look more into, am I meeting those thresholds?
Okay.
Oh, and I see that he says that was not a question. Sorry.
That's my bad. My bad.
No, that's okay. That's okay.
Yep.
I was about to ask that. Like, if I traveled to Virginia and visit Jeremy May and show him how to fish on the James River, and I sell my stuff, do I claim that on taxes? Or do I claim that? Do I have to do sales tax on those sales?
If they're made in the state, they are subject to that state's sales tax. But again, it depends on the threshold.
Okay. All right. And Jeremy, I'm only picking on you about the James River.
Now, if like say me or John, we start making our own lures, we make some jig heads, and we're just selling maybe 10 packs a month, and it falls below the threshold, we don't have to worry about sales tax or anything like that.
Not if it's below the threshold, and
Okay.
every state has a different threshold.
Yeah, so
But
that's
technically, you are required to register in that state anyway. Most people don't.
Okay.
As a DBA, or
You could be a DBA.
okay.
No.
So if I did a DBA for JCX Fishing, okay, I would be able to claim all my fishing expenses towards that business?
You don't even have to have a DBA to claim those expenses. So
Yeah.
Okay.
you could just be John,
Yeah.
company. And I
Right.
mean, you don't need a DBA, you don't need an LLC. Those are all for different purposes.
Okay.
So if you want name recognition, or you want to build business credit, then that's where those things, or you need liability protection, then that's when you start creating the LLC or creating an S Corp.
Mm-hmm.
Yeah, when I created my marketing company years ago, I went to an accountant and they're like, I don't trust LLCs because they can't tell me what is limited liability means. So he signed me up for an S Corp.
So an S Corp is just a tax status. As far as liability protection, it really doesn't affect that.
Here's a question I know people are going to like answered. Are there any red flags in the fishing industry that might trigger an IRS audit?
So most of the time when we are in an IRS audit, most of the time it's just a line item audit, and they want to see receipts for interest, meals, automobile expenses if they're really high. Very rarely do they go line by line and audit every single line on the tax return.
Okay.
What I will say is a red flag for an audit is if you report less than what the 1099s say. So if I get 10 1099s in the mail, and if I add all those up and it's 200,000 is my gross, but then on my Schedule C I put 150,000 was my gross, that will definitely raise a red flag. And so that's a lot of times why we see people get those line item audits.
And don't think that just because you didn't get a 1099, that whoever paid you the money didn't report the 1099.
That's
So
true.
they may have filed with IRS, but didn't have your address and never sent you a 1099.
Yeah, I always appreciate when I get a 1099 because that means I made some money.
Yeah. But the fishing industry as a whole is not a red flag.
Okay.
Yeah. The supplies, writing off rods and reels, your boat, those things are not going to be a red flag. So, you know, what we always say is, you know, as long as you're being diligent, keeping up with receipts, is, you know, and being honest, and you're in it for a profit as your purpose, you really have nothing to fear. You just want to be careful and make sure that you're not under reporting your gross number, you know, or anything like that. But
Okay.
Got you.
mm-hmm.
What's the best way to report the income from tournament winnings, sponsorships, guide services? What's the best way to do that so it doesn't trigger any flags?
Well, the IRS is not going to know that it was from tournament winnings, guide services. They're just going to see a number, gross revenue.
Okay.
So
Yeah,
all of that income is going to go on that one line,
Mm-hmm.
Okay.
except for royalties.
Yeah. On the tax return itself, yeah, it's one line. For QuickBooks, though, if you do set up a QuickBooks, it is nice to be able to categorize it by, you know, income type, just for your own records, to be able to see, wow, I really did good with my tournament winnings, or maybe my sponsorship income. You can kind of see where most of it's coming in from. But yeah, for the IRS, they just want that one number.
Yeah. Okay. Now that you mentioned QuickBooks, can you run your personal, and I know you should separate your personal income from your business income. Say like some tournament fishermen, they don't have a separate bank account. Can they do that in QuickBooks? Say, okay, this purchase at Bass Pro Shops was business off the same bank account?
You can. It makes it very difficult if you get audited, because instead of showing them your business bank account, you're opening up the whole can of worms. So we always recommend get your personal account, get your business account. But if you only have one account, yes, in QuickBooks, you can code those by class. So you could have a personal class and a business class.
Yeah.
And then you could pull up only business or only personal.
Right. And if you go LLC route and you end up creating an LLC, you know, typically that next step is opening an LLC bank account anyway. And so that's when we really want to harp on keeping personal out of that account.
Yeah. I got a quick question. I do first year, there's a lot of fishing shows. So I have some sponsors, you know, want me to, you know, go and help them out. Like say it's in Knoxville, Tennessee. Now, do you write off your mileage and the hotels, or how do you approach that? If it's a fishing show, your sponsor wants you to be there at.
Yes. So that's part of your business. That's a business expense. So if you were going to go to Knoxville, I think you said,
Yep.
And it was partially business, partially pleasure, then you could still write off the miles to get there, the miles to get back, your hotels for the nights you were doing business. But yes, definitely. You know what we see more than people over reporting expenses is people under reporting expenses. People are so terrified that they're going to get audited. They just cheat themselves out of so many great deductions. And you don't need to be. You don't need to be.
Yeah.
Like I can almost look at a tax return and tell you if you're going to be audited. Not 100%, but right, Nick? Like,
Yeah.
you know, you're a W-2 employee and you have, you know, 50,000 miles of 50,000 miles of travel expense. Well, no, it's not going to pass.
Yeah.
Well, yeah, because it's like if that's a side gig, then it's kind of obvious that, okay, well, yeah, I probably don't have that much travel expense.
Yep.
But maybe if that's your only thing that you're doing, well, then yeah, of course you're going to have a lot of travel. So it's things like that that I think Mitzi's referring to, where you know, if you have like 50,000 worth of interest as an expense as one line item, so you're at negative 30,000. that might be like, huh, that's strange. All his other deductions are 2,000 here, or 3,000 there, and then we've got a 50,000 interest. That doesn't seem right.
With
So
no
obviously-
assets.
With no, yes, yeah. So obviously things that are just look like a typo or something can raise a red flag like that. But if you're just being diligent and honest, and you're adding these actual expenses you had, there shouldn't be a worry, about raising a red flag or something like that.
Yeah. And so if I didn't answer your question, you're in the fishing business and you're a podcaster and you have fishing income and one of your sponsors wants you to go to a tournament. Yes. Write that off.
Okay.
Excellent.
Good point.
You
got a quick thing from Al. It's like,
yep. Al with American Angler Outdoors says, I have a network and a lure building business. Should I keep both businesses separate for accounting?
If they are two separate companies that need to be reported on two separate tax returns, yes. If you're putting them on the same tax return, maybe you have them in the same QuickBooks, just tag them separately, separate classes. But yes, each business needs to be listed separately. So if you're a self-employed and you have a network business and a lure building business, then you will have two Schedule Cs. Now they may roll up under the same S Corp at some point in the future.
I was going to ask you, Tim Stakis, what's the approximate cost to create an LLC and the version of QuickBooks you recommend? I know there are several levels to choose from.
Yes. So usually, I believe it varies with states, but like in Texas, it's $300 to form an LLC with the state of Texas. If you do it yourself, that's just the filing fee with the state. You could obviously pay us or an attorney or someone else to create it, and then that fee obviously would be higher. But that's kind of the ballpark. That's about how much you would pay for the state. Typically, to pay someone to do it for you, I would say it's probably going to generally be at least $1,200 to $1,500 for that service. And as far as QuickBooks goes, honestly, if you're just getting started, I believe it's called QuickBooks Self-Employed now.
Yes.
Oh,
Yes.
Don't do that with Nick.
No, why not?
No. Well, it's a completely separate login. We don't like QuickBooks Self-Employed.
So maybe I'm saying the wrong one. Let me pull up their website.
I think it's essential. So basically for QuickBooks, you want to get the least expensive version, start there. And then if you say, well, wait, this doesn't have classes and I need classes, I'm running two different businesses in the same QuickBooks, or maybe I have a personal class and a business class, then you're going to increase your subscription. So you can always go up, you can always go down, but you may as well start at the least expensive version. And then as you see features, if you're going to run payroll, that's another higher version.
And by the way, they've changed the name of this so many times over the past few years, but it's now called QuickBooks Simple Start.
Yes.
That's what I meant to say. QuickBooks Simple Start. It's $35 a month, but your first 3 months are half price. So yeah, it's really not that expensive. And like Mitzi said, you can always upgrade, but that Simple Start, that lowest level is great.
And we do a 5% discount for our clients. We give them a 5% discount off their subscription.
Cool.
And Tim Stakis says, thank you. I'm just going to throw in here because we haven't really, Al says we're an LLC taxed as an S Corp.
So you're an LLC taxed as an S Corp. So each of those businesses could be a DBA that roll up into your S Corp. And that's the way we would set it up.
Oh, okay.
That's a good structure.
So,
Or each one could be an LLC that roll up into one S Corp.
And so he wants to track those books separately, obviously.
Yes.
So yes, it'd be good. And you can do that in QuickBooks with the same QuickBooks. You can do it by class, but usually it's cleaner to just set up a second QuickBooks, honestly. But I guess, it's a little bit more economical to just do the class feature probably. And we see people do that if it's easier to keep everything in one place.
And also he's saying he's an LLC taxed as an S Corp. Does he need to keep each company separate? You technically are required when you do your S Corp return to report each individual business on a different schedule, but it will be on the same 1120S.
American Angler Outdoors says, thank you for all the information. Great show, guys. Thank you. Appreciate you, Al. Let's give you. I have a question for you. It's not really tax related, but what's your favorite homemade cookies?
Nice. I like that.
Mine are macadamia nuts.
I'm just chocolate chip cookie has always been my favorite.
Okay. Well, like we said before, my wife and I used to have a podcast, and that was one question she asked every guest was, "What's your favorite homemade cookie?" And so,
nice.
Now, can I say my wife sponsors me with food, right? Because she's a baker,
right? Mm-hmm.
Is there a way that she can write that off, or I can write that off?
Well, technically, anything that's given to you, whether it be money or something in place of money. So, normally if you'd be sponsored with $1,000, so instead someone sponsors you with 1,000 cookies, you would need to report the value of those cookies as income. And then maybe the person gifting them would write off the cost of baking the cookies, the cost of all those, flour and eggs and things like that.
Okay.
Makes sense.
It does. Like I said, thank you guys for coming on. Would you like to give everybody good contact information so they can get a hold of you and try to get some business from this?
Sure.
Yeah, definitely. Thank you guys again for having us. This has been great. So the best way to contact us would be our emails or visiting the website that's here at the bottom of the screen. And you'll see our emails and contact. There's a contact form on the website as well, which will come into our office administrator. The firm was under Mitzi's name, and we're changing the name to Sullivan and Grantham starting in 2025. So just keep that in mind. But as of right now, if you search Mitzi Sullivan CPA, on Google, we should come up. We're in Decatur, Texas. And yeah, we can work with anybody all over the US and Canada. So definitely reach out if you're looking for a CPA.
Awesome.
Outstanding.
Well, thank you two very, very much for coming on. Appreciate it.
You're welcome.
Hope our guests got a lot of good information, not what you read on Facebook all the time.
Right.
All right. Well, thank you very much again. And you guys take care. Have a good night and have a blessed Christmas.
You too.
Dude, thank you guys again.
Yes.
Merry
Thank
Christmas.
you guys. And congrats on 2025. I know you got big things coming up. So good luck on your future endeavors in the next year. And appreciate you guys.
Well, I hope you win some tournaments.
We do. I do too. All right. Good night, folks.
If you found today's video helpful, please give us a thumbs up, consider subscribing and leaving a comment below. And as always, thanks so much for tuning in.